And now to my conversation with insurance industry expert Karl Susman.
What do you think the future of homeowners insurance looks like in a state like California right now?
I think we're going to have to come to grips with the fact that wildfires are the new normal, that we're going to be seeing them, and that risk is going to be there with us, and our insurance rates are going to reflect that exposure.
What would you tell people right now that have homeowners insurance? What are things that they should be looking at on their policy?
Well, everyone should definitely stop and look at their policy, because a policy today does not exist that would cover everything the way we probably think it should or would. The most important thing is if you have coverage right now, is put it on auto pay. Be sure that it is automatically going to get paid every month or every year. You don't want to have a problem with missing a renewal. The chances are, if you miss that renewal, you're not going to be able to get that policy again. And it could be a difference of tens of thousands of dollars. Find out things about replacement cost. How much coverage do you actually have? What we're seeing with the wildfires in Southern California, numbers that seemed reasonable, $400 a foot, $500 a foot for nice homes in some of the Palisades area. Now, when we're looking at a demand surge where we're having the entire city that has to be rebuilt, we could be looking at double that. So it's difficult to try and decide where you want to fall. How conservative do you want to be? Do you want to be prepared for a fire or a fire that could impact your entire neighborhood? But the level of coverage you have would be impacted by that.
Do you see anything that people typically miss on their coverage, or if they're underinsured? Is that something that you notice?
I think depending on where they get their coverage, additional living expenses is one of the coverage areas that people tend to not really understand. And so they'll take as little as they can, or they'll take the percentage that the company's policy includes with them. That's what's paying for them to be somewhere else while the home is being rebuilt. And again, if we're looking at the wildfires in Southern California, they're talking about 12 to 18 months before we can even start beginning to rebuild there. So policies that were designed to pay for 1 or 2 years for additional living expenses, they're probably going to run out long before someone is actually able to move back into a home.
For people who maybe don't have a mortgage anymore, they're not really worried about homeowners insurance, what would you say to those people, especially that might live in a high wildfire risk area? What would you say to them right now?
Once you pay your home off, now it's 100% asset, right? It's all yours. So that's the last time you want to stop saying to yourself, oh, now I don't want to protect it. Now you really want to protect it because it's all an asset of yours. So even if it costs more than you would like it to, even if it costs more than you're accustomed to paying, make sure you have some type of fire insurance coverage, because again, that's it. That is everything now. It belongs to you.
Can California and the insurance companies that are involved cover all the claims that have been submitted through these, LA wildfires?
Fortunately, the answer is yes. And we really didn't know what to expect because there has not been a situation where this level of destruction has happened. But all of the private companies really have been stepping up and paying claims.
And I do want to talk about the insurance commissioner's sustainable insurance strategy, something we've talked about a lot. Where does the plan, though, stand after these fires? Do you think it's going to deter some of the insurance companies? Do you still think it's going to have an impact the way he wanted it to? What are your thoughts?
The timing could not have been safer, because the last of the sustainable insurance strategy laws went into effect, I believe it was December 29th. It was days before the fire. And the reason I say fortunate is because if that hadn't happened, if those new regulations had not gone into place, what we would be seeing right now is a wholesale pulling out of California. Carriers would just have thrown up their hands and said, we don't see a path forward, we're not going to spend these dollars, and know that there's no way we can ever do business here again anyway, and they would have started leaving. So I think, thank goodness it happened when it did, because now the carriers, again, they're paying their claims, and they know they're always thinking 5 years, 10 years down the line, right? You and I talk about what happens today, tomorrow, next year. They're thinking 5 years, 10 years, 15 years, and there's a path forward now.
Do you think there are some concerns, though, seeing with what happened with the Palisades and Eaton fires for those companies?
Well, I think they're concerned, but they've been concerned. See, this is news for you and I because this just happened. This is something that they've been concerned about for a long time. It's one of the reasons that State Farm, if you look at the two areas that it non-renewed the most policies, or at least was prepared to non-renew, one of them was in Northern California and one of them was in Southern California. Guess what the zip code was for the one in Southern California? Pacific Palisades, 90272. So are they upset? Of course. Are they concerned? Of course. But this is not news to them. This is what they've been trying to prepare for, to be able to have a product and be able to pay the claims when they come.
And I know that we talked about this before, State Farm requesting that rate increase after the LA wildfires. What are your thoughts on it?
So I think we have a double whammy at this point. One, we have rates that have been suppressed from where they actually should have been. Rates haven't even gone up to follow inflation in the last 3 or 4 years, which is kind of silly when you think about it. When you have a claim, the insurance companies have to pay for all the things that now cost more money because of inflation, but their premiums don't reflect that.
Ricardo Lara, the insurance commissioner, he met with State Farm to talk about this rate increase. Where do things really stand right now?
What I think happened in the meeting, State Farm put in a request for what's called an emergency rate increase, which in essence, it bypasses a certain path that exists when an insurance company wants to have additional rate. And they did it under the auspice of, we can't wait. If we don't have this, we genuinely may not be able to pay our bills. It's not something that we see insurance companies do very often. I actually can't remember the last time it's happened, certainly not from a company that we would know the name of off the top of our head. And the insurance commissioner could have said, well, yes, clearly with everything going on, if we're not going to approve rate after this type of a disaster, when could it ever be justified, right? But instead, he still said, you know what? I want to sit down and talk about it. What he was saying during the meeting was he was trying to get guarantees from State Farm that, look, if we give you the rates that you're saying you need right now, will you, number one, stay in California? Because that is a fear. They hold 20% of the market in California. If they decided to throw up their hands, we would have a real problem. And number two, he was trying to get commitments out of them to offer more policies. State Farm hasn't written new policies in several years, and State Farm was reluctant to do that. And that, I think, was frustrating for the insurance commissioner and for everyone, really. So when I hear one company still not being able to commit to saying, yeah, we'll start writing business again, it's a concern of mine, because if they can't do it, who else is going to start?
And so where does the state of things stand right now? Do you think that they're likely going to approve the emergency rate increase?
Ricardo Lara said he was going to give it about 2 weeks to decide what he was going to do. And we'll see what he decides to do. I suspect he's going to have to give some level of relief because, again, State Farm has had losses. In an event like this, where clearly we can all accept that the carrier's paying out more than they've collected in premium. They've paid out more than they even forecasted they could ever have to pay out in claims. So if we're not able to justify rates based on events like this, I don't see how the carriers would ever be able to get any rate. And if that happens, then we would see the domino effect of the carriers not only not offering new policies like they are today, but leaving the state altogether and taking the existing clients that they had and just leaving them.
When people are at home and they're hearing, company X, whether it be State Farm or whatever, is asking for a rate increase, can you give some context as to what that means to the average person sitting at home with a policy? Because they might think, oh no,